Good morning, everyone. Thank you so much for tuning in. This is Disrupt Radio Online. We are broadcasting through Google Hangout this morning for the second episode of Cowboys and Crowdfunding. We are talking about crowdlending, which is also known as peer-to-peer lending today. We have two very special guests with us. My co-host is Vicent Petrescu, who's from TruCrowd. Welcome, Vincent.
Hello, good morning. Thank
Good
you
morning.
for joining us.
Very happy to have you. And we also have Viktoria Krane. She is the co-founder and CEO of Lendoor, which is a very hot and innovative new approved equity crowdfunding portal located in Texas. And so thank you so much, Victoria, for joining us for this hangout this morning.
Thank you, Cynthia. If you allow me, though, we are actually debt-based crowdfunding platform. I know this is very, very new, so most people know about equity crowdfunding. Well, there is a debt option as well, so that's what we do. And thank you for having me.
You're welcome. So you'll have an opportunity to explain that further here as we have further this conversation to talk about peer-to-peer lending. Vincent, what are your thoughts on peer-to-peer lending and crowd lending today, as you guys are a new approved equity crowdfunding portal, but we've had a very great discussion with people in the past, especially at our town halls, learning about all of the different alternative ways small businesses can raise capital. What are your thoughts on this space?
Yes, crowd lending is another, I would say, crowdfunding method. For some businesses, crowd lending is better than equity crowdfunding, and for other, equity crowdfunding is better than that. As everything else is, might be the same discussion between what is better, renting or buying. So pretty much it's kind of in the same dispute, lending money or giving away equity. Both of them have advantages. And from my perspective, crowd lending, one advantage is, for example, I'm also CPA, so at the tax time, the entrepreneurs, the startups that crowd lend their capital, they will have a nice write-off for the interest that they paid. So that's another extra benefit of that.
Interesting. So Victoria, let's talk about how your portal works. Give us an inside look into Lendoor and how your model works.
Great. Yes. So it is very straightforward. If you're a small business and you need a loan, you can come to Lendoor. We'll facilitate you in crowdfunding your loan. It's a very straight, simple term loan. You get to choose the amount of the loan up to $250,000, the length of the loan up to 5 years, and you also get to choose your interest rate. So it's a borrower offered interest rate, right? So it sounds great. Where is the catch? Well, you will also have to be able to crowdfund and convince enough people to invest in the loan that you're offering. So you have to bring your own lenders in a sense. Excuse me for 1 second. So how does it work? It's a super simple process. You come on the platform, you sign up for an account, you start a loan project. The loan project it needs to contain several pieces of information about your loan, information about your business, and I know a lot of business owners just love to talk about their business, what they do, who their customers are, how they're better than their competitors, and so forth. So all that you lay out on your loan project. You also have to tell us a little bit about your finances. If you are existing business, we'll ask you for 2 years of prior financials. If you are startup, we'll only ask you for your projections, but in either case, you'll need to give projections, so you need to explain how you're going to repay this loan. And we expect you to be able to repay this loan with internally generated funds. And then finally, last but not least, you need to tell us about your team, who are the owners, who are the managers, who are the people behind the business. Once you have laid out all this information, you submit your loan for approval. We do not do credit underwriting, so we are not going to run out and run a credit check on you. It's up to you really to either release your personal credit score if you want to, or stay silent about it. Completely up to you. What we have done is to structure our presentation in a way that we brought a lot of information, a lot of education, how for you as a borrower to lay out your best credit case for your potential investors, and for the investors, how to interpret the information, and in a combination with the insight that they're bringing to the business, we believe those would be people that know either the business or the business entrepreneur firsthand. They will, in a combination of that, along with the information that they read on the platform, they will be able to make an educated decision whether to invest in this loan or not. So we will run a quick background check, quick but thorough background check, make sure that the company exists, make sure that the owners are real people, and then make sure that you meet the minimum requirements of the Texas State Securities Board. We also will help you set up an escrow account with a Texas-based bank, which is also one of the regulatory requirements if you want to crowdfund, and then you're ready to go. So now the fun begins, right? 30 days, you have to reach out to your entire network and convincingly have them invest in your loan. If you collect enough pledges within 30 days, then we will originate your loan. If you do not collect enough pledges, unfortunately, we will have to refund however many pledges were done back to the investors, full refund. If you were lucky enough to originate a loan, well, lucky, or it's not really all about luck, then it will be very easy from there on. Each month you make one single payment, and through our payment processing company, we'll distribute it to all of your investors. It doesn't matter whether you have 30 or 300 investors.
Very good. Vincent, you had a question?
Yes. Victoria, you mentioned about that 30 days duration of the campaign. Is that fixed, or the issuer, borrower, entrepreneur, they can change that, and how that works with the lender?
Well, for the time being, it's fixed. Of course, we are still getting to know our customers, so that, it's fixed but might change. The idea behind it being that you really need a couple of days to make a decision, and so if you leave people a lot of time to think, they'll just take all their time, and they still will take the last 2 days to make the decision. So we might as well set it in a reasonable time frame where you, as a small business owner, will have to dedicate a lot of time to crowdfunding your loan, but you also have a business to run, so you can't be spending months and months trying to crowdfund a loan. And
yes.
Also, we've learned from platforms as Kickstarter and Indiegogo, where 30, 45 days is pretty much the optimal amount of time within which you have to crowdfund. There is one more thing I should say about this. Even if you crowdfund your loan immediately within the first few days, you still have to sit there 21 days, because by regulation, your information needs to be available to your potential investors for at least 21 days before you are able to technically sell a security or originate your loan.
And there is one more investor protection mechanism that Texas Security Board put in place, that is unpledging. So an investor, they pledge day one, next day, if they learn some extra new information, they can unpledge, and then again, and unpledge again. And they can do that without any cost to them. So
that is true. On Lendoor, we don't have minimum maximum. We have one amount. Okay, so you need $10,000 to buy a coffee machine. You need the $10,000. You don't need $15,000. You don't need $20,000.
Yes.
But we do allow oversubscription of the loan, so we would take investors for over $10,000, but we will only originate and sell the loan and send the securities to the on first come first serve basis.
Makes
so no
sense.
minimum maximum, just exact amount. How much do you need?
Yes. So from investor perspective, so when they pledge, they can unpledge at any time, right?
Up to 3 days before the loan closes, they can.
As an investor, I pledge today, okay, and I learned some in my way. I did my due diligence, let's say, and I learned something, and I want to unpledge the next day. Can I do that?
It depends. I mean, we won't let you unpledge if the loan is closing in 3 days. But because then
I have any time I can unpledge.
There is a minimum amount of time, so you can, if you on day 1 you pledge and day 3 you change your mind, yeah, that's fine. But you also have to understand that you can't be like pledging. Or this is a business transaction after all.
Yes.
So we give you as much flexibility as we can,
as the investor,
without jeopardizing the labor of the borrowers as well.
So how does Lendoor or Crowdlending or peer-to-peer lending make the process safer and secure for the for the investor? Is this a better deal for the investor because they can feel safe that they are going to be repaid?
That is an excellent question. There is a difference between feeling safer and actually being safer. The loans that are being originated on Lendoor at the moment, at least, are unsecured. There is no personal guarantee, so it's what you're getting into. Basically, you're relying on the business owner to meet their promise and pay back. You don't necessarily have assets that you can sell to recoup your loan, and we want you to know upfront that that is the case. So what will happen in case of default, and unfortunately default is fact of life and so many businesses won't make it, Lendoor will facilitate the involvement of collection agency. So if you lend to your cousin on Lendoor, they approached you, you lend, then they start paying. You don't necessarily have to be the bad guy that is taking your cousin to a collection agency. Some of the cases will probably be resolved through the help of collection agency. Unfortunately, not all. And so there is always the possibility of loss. Hopefully you won't lose all your money, because unless it's a really fraudulent case, the loan is monthly amortizable, so you lend $1,000, for example, for 2 years. Immediately, then the very next month, you start receiving part of the principal and interest. And so, depending on when the loan defaulted, that's what your loss would be.
Victoria, so yes, it is unsecured, but still there is some protection for the investor. In my perspective, for example, entrepreneur A, they bought a coffee machine, $15,000, and they cannot pay back. At least at the minimum, the investors, that they can sell that machine and get paid whatever they can, right? So at least they will secure with that. If they any kind of asset.
So let me kind of call on my over 15 years of credit experience. In a situation where a company does not have the ability to pay, usually there is no cash left in the bank account. All the inventories are run down. They could potentially sell the machine and pay back. And so I think actually crowdfunding is lending to somebody through a crowdfunding transaction puts you in a better position because it's a very public thing, right? You're borrowing from your community. The last thing you want to do is to not pay it back.
Makes sense.
And you do have the obligation to pay it. It's not like you don't have the obligation, but I just want to make it very clear, as a lender in this type of transaction, you can't just walk into somebody's coffee shop and take their coffee machine. That is not going to be the process to recoup a loan.
Okay, makes sense.
Wonderful. So the future of crowd lending, there's been a number of articles that have been written on this particular topic, and people are interested in it. Peer-to-peer lending has been going on for some time, I believe about 4 or 5 years, if not more, and doing very well, actually. There are some portals out there that are very, very successful with peer-to-peer lending. It's not brand new. It's new, so to speak, as it relates to the regulations in Texas, and being able to raise capital from your immediate community or within the state line, so to speak.
Yes and no. I think peer-to-peer lending has started in one place and ended up in a totally different place. So you're probably referring to platforms like Lending Club that started as originator of personal loans of up to $35,000, and some people will take personal loan and use it for business loan, but that's their meat and bread and butter, so to say, of loan origination. And while at the beginning, I think they started in 2008, it was just people helping people that needed cash for something. The institutional money pretty quickly picked up on that opportunity and got involved. So if you look at Lending Club today, a great deal of the investment money are actually coming from institutions, not from real people. So peer-to-peer has almost become misnomer. In terms of in terms of individuals lending to small businesses, that has not and still is not very much the case because of regulation. And so Lendoor started in late 2013 with the vision to do crowd lending transactions on a national scale. Unfortunately, we're still waiting for Title III crowdfunding rules to come in place. Texas being forward-looking, yay, adopted rules in last November, and so that prompted us to launch our platform in Texas and sort of learn from the experience. And Texas is large and a very entrepreneurial state, and we hope we'll do very well, and we'll hope we'll have a lot of businesses.
Thank you for that. So as we look forward to the future, there are many opportunities for Texas businesses to raise capital. Of course, you have your traditional means, your normal banks and credit unions, and you also have your micro lenders, which you guys, I hope, will be making an announcement soon about a relationship with a local Texas micro lender. And then you also have credit cards, which I'm not a proponent of, but plenty of people have used credit cards to launch their businesses. And then you have crowdfunding. Friends and family are other sources as well. But crowdfunding is growing to become one of the leading methods that people are using to raise capital for their startup businesses, for their prototypes and ideas, or to help support expansion and growth of existing businesses. And I'm really thrilled to be involved in this, and I'm really thrilled to talk to both you all. Even though your portals are in different areas as it relates to crowdfunding, they are very, very viable options for people looking for the small dollar amount all the way up to, in Texas, $1 million. However, Victoria, I know that you guys have a cap on the amount someone
We have capped it to $250,000 just because this is from $10,000 to $250,000 is probably the most used size of loan for small businesses. And you're correct, there are a lot of options, but they, in terms of borrowing money, banks and non-profit lenders, online lenders, crowdfunding, friends and family, some of those options are not available at all times. Through the life of a company, it usually goes friends and family, non-profit lenders, banks, and credit cards somewhere between friends and family, before or after. I think crowdfunding at the moment overlaps over friends and family, so it's just taking a traditional existing friends and family financing market, unregulated, yes, basically unregulated, and takes it online, makes it more efficient, more transparent, just better for both sides. As Vicent mentioned, it does make it more secure for the investors, because by lending online through Lendoor, they do sign a formal agreement with the borrower that the money will be paid back on certain terms, which quite often is not the case with the friends and family transactions. So yeah, lots of options available. We don't feel like we are competing with anyone really. In fact, we are working with several of the nonprofit lenders. We will be announcing shortly a sort of match lending program with one of them. They see the potential in crowdfunding. They see it as a social proof that a certain business or business entrepreneur is worthy of being lent to, and so we shortly will be announcing that program where if you crowdfund $10,000 or over, a nonprofit lender will automatically lend you another $5,000. So as Vicent mentioned, you need $15,000. You can scrape by $10,000 from your friends and family. You still need another $5,000. That's up to 50% match lending. You'll get that from the nonprofit lender, and that is just a pilot program. That's just the beginning. The opportunities from there are really, really many.
Very true. Vicent, any last words on crowdlending?
I'm sorry? Oh, Vicent.
Yes, I read and I agree with, I don't remember who wrote that, but he said that crowdfunding will be the next big thing after the internet. So in his opinion, the change that internet brought to our lives, crowdfunding will surpass that somehow. And I totally agree with that. With lots of people that all talk to, they have the same vision for the future. So very happy to be part of this movement.
Same here. If any of the viewers would like to learn more about you all's portals, they can visit TruCrowd.com. That's TruCrowd.com, and then also Lendoor, LENDOOR.com to learn more about Lendoor, or to begin their process of raising capital through debt lending or debt crowdfunding.
Debt crowdfunding. Oh, as we call crowdlending.
Very good. Thank you all so much for your time on this Saturday morning. I really appreciate it. Have a wonderful day.
Thank you,
everybody.
Thanks. Bye-bye.
Bye-bye.